move on here into this next slide, and it's how the pieces fit together. I'm sure I could have come up with more than 21 pieces. I'm sure that if we talked about it a little bit longer, we could probably find 7 or 10 more pieces to talk about. But it's effectively your foundation, your selection, your execution, your management, and your survival. So you have to, it's hard to find the winning stocks that could be winning stocks if you don't know how to scan the markets. So, and then it's hard to get yourself to hold a position if you oversize. But again, as a brand new trader, these are all things that we kind of have to learn. And instead of being overwhelmed with all of the things that you have to learn, we're going to try our best to break it down into individual pieces so that it doesn't feel too overwhelming. So with that, let's talk about the foundation, which of course, Richard, as you mentioned it, read the market before you read the chart. It is incredibly important. And the first foundation or foundational piece would be risk on versus risk off, reading the market environment. And then I put here 75% of stocks, and that's typically, and I say that because it's majority of the stocks that we're going to be trading, growth names. A lot of people aren't necessarily, and I guess to this, before I continue, if you're trading a gold stock, I don't care that the S&P 500 is coming down. I'm focused on GLD or gold futures. If I'm trading cryptocurrencies, I don't care that the NASDAQ is going down. I'm focused on maybe Bitcoin or Ethereum or any other one of the cryptos that might be moving. And so when I say if you're focused on, and if you're buying an energy stock, oil and gas, what crude oil is doing is important and maybe has zero to do with the NASDAQ. So, and I would say half of your stock's price appreciation is directly correlated to the group that it's in, but even more so, it is correlated to the underlying market as well. So majority of your stocks move with the market. The biggest lever to your own P&L is reading the market regime than it is picking the stocks. And it goes back to what I mentioned earlier. It's not the what you buy and where you buy it, it's when you buy it. If you had been going through the correction and the choppy phase, which was, middle of October, November, December,